please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Mobile lending platform operator WeLab successfully landed another round of funding. The Hong Kong-based fintech company raising another $220 million from the Alibaba Hong Kong Entrepreneurs Fund and the International Finance Corp. WeLab plans to use the funds to advance its technology and introduce new products and expand beyond their home base of Hong Kong and China. Simon Leung is CEO and joins us on Squawk today. Morning, Simon.
Morning.
Congratulations on another round of funding. This is just the latest in what's been a very, very busy year for you, right?
Yes.
What are you going to do with the money exactly?
So we're looking at a couple of areas, right? As we see the credit technology maturing, I think we want to invest in it a little bit more. We see that how we can use AI for risk technology. I think that's one part. The second part is our core B2C business, where we are now at 25 million users. I think we will look at how we can massively scale that up next year. And the third part of it, right, is as the model is maturing, how do we actually license this technology and work with banks, financial institutions to build our B2B business? Right now, we've signed up around 40 banks in China and Hong Kong, and also we've just launched a cooperation with the mobile carrier in Hong Kong to see how we can actually build fintech solutions for companies as well.
So you're talking about going with the enabling the financial institutions to use your platform. Are you doing that? Are you going to the financial intermediaries instead of like the SMEs, like a company like Dianrong made very, very obvious in their in their business plan? Are you doing it differently? Not going direct or what?
It's not going direct. I think the B2B business model is an essential one where basically a lot of banks do want to take advantage of the fintech revolution in China.
Right.
However, they don't have the technology or the DNA to be able to do so. So we actually can enable them with such technology so that they can look at mass market, underserved banking segment lending through the technology.
Interesting, because dozens of banks, working with you, that tells me that they're behind the curve, that they didn't enunciate, they didn't really create any kind of a peer-to-peer lending environment themselves, which is why a lot of fintech, young fintech companies like you are actually going to the banks and enabling them. I mean, this kind of encroaches on them in a way, right? I mean, do they do business with you willingly, or do they do it reluctantly, would you say?
It's a willing cooperation. If we look at how the company started, we started 5 years ago. I think different from other fintech companies that you were mentioning, we don't do peer-to-peer lending. I think our focus is more on the risk technology. How do we use risk technology to enable a fully online kind of customer experience? Now, when you have fully online customer experience, you encounter a different kind of risk versus a traditional brick-and-mortar branch-based business model for banks, right? So they actually need this kind of technology to be able to move away from traditional distribution, because you look at a space as vast as China, right? You can't use branches to serve everyone.
Right.
So this is actually the part they like about this is that the technology that enable to them to scale up. I'll give you a number, right? For example, because we don't have branches, we have around one new applicant every 1.3 seconds.
1 million applicants?
One new applicant.
Oh, one new applicant
every
1.3
seconds. So
wow.
It enables us to scale to this kind of speed. So banks obviously want to take advantage of that kind of speed of scaling up.
Right. Let me ask you, I realize that, you have the first mover advantage, and you obviously got tens of millions. I think you said 25 million users in your universe already. So obviously you already have a core, a core audience there. Technically, the barriers to entry to this kind of industry are not terribly high, right? If you got the money or access to the capital, you could start up a parallel universe, right? A parallel platform. So, theoretically, at least at the technical level, the barriers to entry aren't that high. So what kind of protection does a company like WeLab have?
So when we look at this market, I think that one of the biggest entry barrier, right, is building the technology itself. If you look at, for example, if you look at more like a P2P lending, it's more what we call business model innovation, right? For those kind of business models, there's very little entry barrier. But when you look at technological innovation, where you invest into R&D, proven track record, right? Our 5 years of track record lending to so many customers actually allow us to be able to fine-tune the model, introduce new technology much faster than our competitors. So meaning, if you are a new competitor coming in trying to do the same, it'll probably take you quite a few years to catch up to where we are today in terms of the quality of the credit decisioning, mentioning, we have almost zero fraud loss, very, very low credit delinquency without even meeting anyone face to face.
And your and basically your bad loan experience has been about at or around 1%, right?
Yes.
I mean, it's obviously you have algorithms and you have screening procedures within the applications that allow you to focus on really good credit risk. Now that's in Hong Kong and China, which is your core market. I know that you're looking to grow. You're looking at Southeast Asia. What's going to happen there? Is this a different environment? Are you prepared to endure higher losses as you go outside your traditional comfort zone?
I think our business model has never been high interest rate, high losses. I think what we look at is low interest rate, low losses. It's a part of using technology to solve for financial inclusion, right? And I think every market there will be certain adaptation, but we've done Hong Kong, we've done China. We're quite confident that the technology itself is actually applicable to a wide variety of places. We particularly like Southeast Asia because, for example, if you look at a place like Indonesia, they have 30% of the 30% of the population is below the age of 40. A young, mobile, tech-savvy population is perfect for a product like a mobile lending.
Right. And you talked very early on in our conversation about AI. Aside from, I know that you're looking to grow, you're looking at Southeast Asia. What's going to happen there? Is this a different environment? Are you prepared to endure higher losses as you go outside your traditional comfort zone?
I think our business model has never been high interest rate, high losses. I think what we look at is low interest rate, low losses. It's a part of using technology to solve for financial inclusion, right? And I think every market there will be certain adaptation, but we've done Hong Kong, we've done China. We're quite confident that the technology itself is actually applicable to a wide variety of places. We particularly like Southeast Asia because, for example, if you look at a place like Indonesia, they have 30% of the 30% of the population is below the age of 40. A young, mobile, tech-savvy population is perfect for a product like a mobile lending.
Right. And you talked very early on in our conversation about AI. Aside from programmers writing the criteria in these apps, how do you use AI? This is very important. How do you use AI to improve the experience, the whole process, and to reduce losses? How does AI actually work on itself to make the whole thing better as time goes on?
So AI is a very important part of our technology initiatives to see how we, in the past, right, people actually use automation, basically use machine to automate human. But I think we're tweaking around saying that how can we use machine to take the lead and human assist the machine. So AI is now, we're using AI in a couple of areas, right? From better credit underwriting, we use it to screen out documents. Customers submit documents. The machine can now learn how to find a fake and a real document. Facial recognitions.
Wow.
We have a machine that can actually talk to a human being. 70% of our customer service is done through a chat base. And we just launched a new chat application process, meaning you don't have to fill in forms anymore. You just have to chat with the machine on WeChat, and it will complete your whole application, and the machine will tell you approve or decline on the spot. Just like us talking to people individually, you just chat, and that's it. You can complete the whole thing without talking to anyone face to face.
Simon, I'm glad I didn't become a loan officer. It sounds like you've really put them out to pasture. It's great talking to you. Keep us abreast, okay? Keep us updated on what happens in WeLab, especially when you get into Southeast Asia in a big way. We're talking more about financial technology and how traditional players in the financial industry are adapting. We'll be speaking to Prudential Asia's recently installed CEO, Nick Nicandro, next hour of Squawk. Meantime, a lot of predictions for the future coming from the Web Summit in Lisbon, Portugal. Among them, Intel. The CEO, Brian Krasanik, spoke to Karen and gave his vision on just how transformative artificial intelligence, or AI, as we've been talking with Simon, will be. And he says it's just the start.
You know, I'll just give you one example where artificial intelligence is going to really change and help human, is in healthcare. So, for example, there's data now that suggests that because artificial intelligence can look at things and see changes and shifts much sooner than human eyes can, using MRIs, they can detect Alzheimer's onset years earlier than a doctor or a human could detect the Alzheimer's in the brain by changes in the brain. And we all know that Alzheimer's, for example, the earlier you detect it and get on the medications, slow it down. So Alzheimer's, it may take a long time for it to be cured, but AI may help us slow it down to a point where it doesn't affect our lives nearly as much as it does today.
Stephen Hawking has warned about millions of job losses from artificial intelligence or humanity being sidelined. You mentioned healthcare. One idea was that AI could be used in triage. These are not low-skilled jobs. When we talk about the first interface with an emergency worker or a healthcare professional. Are you concerned about job losses that AI could bring?
You know, every time there's been a big shift in technology, go back to, cars or airplanes, people thought the industries were going to die, people were going to be out of work. And what happened is it shifted and it actually augmented and allowed even more jobs, more opportunity, more commerce. And so AI is going to do the same thing. It's going to allow those trained people to actually focus on more treatment and less triage, for example. So it doesn't mean there's less skilled workers. It means that they're able to focus and we're able to treat more people. And so think about it that way, as we're able to serve more of mankind with the skills that we do have.
If artificial intelligence is going to be so game-changing, where's the regulation? In the past, we've seen regulators, legislators very slow to move on new technology. Are you concerned that this is the same situation, that regulators, legislators are so far behind how quickly AI is being developed?
No, because AI is only going to go into applications that we allow it to go into. And it's in its infancy. So it would be too early to do any kind of regulation today. Like what would you regulate around artificial intelligence today? It's really, we need to foster the innovation and allow it to grow. We're at the beginning stages of artificial intelligence, and so we want to let it really blossom and grow into what it's most capable of.
Technology disruption has triggered consolidation, and the latest wave is that Broadcom has offered to buy Qualcomm for $130 billion. Is it fair to say this is not ideal timing as you make a stronger push into smart chips?
So, I mean, this industry is going to go through consolidation. You look over the last 3 or 4 years, the semiconductor industry has been having an increasing rate of consolidation. And I think it's showing that the industry is starting to mature. People are starting to look at the way to grow is partially through consolidation. So to me, this is a natural part of the industry, and it's probably going to continue for some period of time. For us at Intel, we did several big acquisitions over the last couple of years. We're focused on really optimizing and implementing those acquisitions.
Would tax changes in the States make a big difference to psychology? I know that you were a part of the Manufacturing Council that was disbanded, and very critical, I think the third person to leave that council before it was disbanded after Charlottesville. Do you think tax reform would change the mood music around the administration?
I think, independent again of the administration, tax reform in the U.S. is important. We have one of the highest tax rates. It costs us billions of dollars more to manufacture in the U.S. versus overseas. And so that change in the tax law would allow us to keep more manufacturing. We've kept 75% of our manufacturing in the U.S., but we've had to overcome that with efficiency and all. Tax changes would really help us from a cost perspective.